The imbalances. In this video I want to show you how I use imbalances to make my entries, and please remember that this is still based on the intermediate part of the course and the patterns we are looking for. At first, here I have drawings on the higher time frame. We can recognize here the compression pattern. Yes, this is price is compressing with really big shot to the upside. Price was delivered to the daily supply zone, and we could expect some drop. I marked here my smaller time frame supply zone. I'm just checking if this is with my criteria. So I want to see that the leg out has a bigger volume than the base. So it's confirmed I have my supply. Also I marked the demand zone. Once again the leg out has a bigger volume, and I marked with the yellow line the previous broken lower high. The gray box is another demand zone. Also the leg out has a bit bigger volume. In this case there comes the rule or small law about two zones close to each other. It was very small distance, so high chances that price want to also reach the lower demand in this case. So now let's go to the 1 minute time frame. And what is the imbalance? The imbalance appears in the market when the move is really sharp and fast, and it means that when price is coming back there, the buyers or sellers maybe want probably to hold this price on this while feeling this imbalance. For this I use the tool from our provider. Here's this one imbalance. Simply just drag and drop to the charts. And what happened if I have my marked supply now on the M1? I can recognize this move. Yes, this is the compression, but not finished, without the strongest push to the upside. Even price made the equal highs. So by looking by our pattern, what we should look always in the main zone, I'm waiting for imbalances. I prefer, of course, to use the footprint chart, but here by marking this on the candlestick chart, I can see more. I can see the whole history, and I don't need to move my footprint chart to the left or right all the time to find the imbalances. So where price is coming closely to my marked imbalance, I'm controlling this on footprint to see the behavior, how the orders comes, and if the volume is decreasing. Because what I observed, the safe entry is when the candle, the measured candle, has 2 times bigger volume than the one when we want to enter. So yeah, in other words, I'm looking for at least 2 times lower volume on my entry. So when I recognize here the pattern, unfinished incomplete compression, and the price is moving down, I'm not looking for entry, even if price is on the supply, because there's the missing part. So I'm still waiting. This need to be complete. And here on top we can see the imbalances appeared, and they were broken. So the buyers didn't want to hold this price. So it was not enough push, and these imbalances were broken. There are 2 kind of entries. I shared this also on the guide channel on Discord. The first, the aggressive one, directly after break of these imbalances. Yes, but so we need to be aware where to put the stop loss. It's better to above these imbalances, because price very often like to retest this. We can call that here are trapped buyers. Let's switch to the footprint chart. Yes, here we have the signs of shift on delta. Is big change, negative delta in the supply, so we can really expect the incoming move. What I found here, this is the high volume candle. This way it was still increasing as the last push to the upside, and here I see the two imbalances. We can mark this by this tool. So we have 1 and 2nd. So what I'm looking for is to see the 2 times lower volume than appeared on the imbalance candle. Yes, here we have 174. So I'm waiting for retest when price will come back to get a safer entry, and I'm looking at the volume. It was 168 while retesting, 110 going down, 97 and 47. The perfect, right? The volume was decreasing. As you remember, I hope you remember from the intermediate part of the course, decreasing volume on some area or smaller supply or anywhere is the big probability of not breaking this area price level. So it is safe, yes. So that's why I'm looking for prices calming down. Volume 47 is we can say that this is over 3 times less. So perfect, yes. So and here it was the highest ever candle in this whole move. Decreased volume on our imbalance is the entry. So all criteria are met. Yes, prices on the bigger zone broke the equal highs, make the pattern, make the compression, finish compression with high volume candle, and broken imbalances, which means that the buyers don't want to hold this, and retest with 3 times lower volume. Perfect entry. What to aim for? Yes, what is safe? In this case, we had the demand zone, the M30 demand. Let's check the distance. It is 22 pips almost. Yes, so this is 1 to the 7. Wonderful distance. With the low of 2 zones close to each other, you could also think about the lower one. Just the question if this is not too greedy. Yes, 36 pips. It is 1 to the 12. High chances, but the safe take profit is on the nearest zone, on the higher edge of the demand. If for some reason you chose the lower, because it's happening very often, yes, to reach the lower zone, there comes the correct managing of your position. So if I'm on the straight, I'm looking for my next imbalances as a maximum point price level when I can accept the pullback, because breaking of this imbalance or any supply while selling means that sellers don't want to hold this price. There is no more interest. So if this move happened, price missed the zone, we can read this as equal lows. So still high chances to reach this area. And also here's small supply with imbalance. So if price is coming here and rejecting, very good. Yes, we are still safe because this supply holded the price. Here's even the imbalance, and we could continue to really reach this demand. But if you were aiming for the lower, here's another imbalance, very big one. Is 48 on the bid side is a lot for GU. So if it was broken by the next candle, strong candle, do not wait for more, for rejection. Do not hope this. Yes, so this trade could be closed, should be, with 20 pips. It is still big reward by setting 3 pips stop loss. So managing, observing, don't be too greedy, and watch all the supply on the way when we are selling, and watch how price react with the imbalance. Because yeah, if this is what we are looking for, if someone want to hold the price and he failed, there's no reason to hold the trade, to give your profits back to the market. Here could be another entry, the more risky. Before, this is not in the zone. We could call this as a no man's land, but this is also the reaction on the imbalance pool from the intermediate section. And this fresh made supply on the higher time frame, the move was very sharp. It was here, yes. We could mark that between here and here, yes, there's the next candle, there was imbalance. But it is like marking a bit blind by feeling that move was so sharp that left something here. And the next M30 candle filled this. And it is here. As the previous candle closed on this small pin bar, and when the next half hour candle began, it just filled the imbalance. And the imbalance we have here. These are more for advanced traders, which can expect and which see the imbalance pools on the charts. But here's the same law of decreasing volume on the level. I want to show you this on the footprint. So this is the candle 1357. Sorry, I just want to switch this back. Oh yeah, this is our candle with the very sharp move and left the imbalance 33 to the 0. Let's mark this. You can change the color by drawing another line in the same level to not have so much mess. And we're waiting, yes, this volume here was 289, a lot of negative delta, as a confirmation that really the supply is already made, and we are looking for lower volume at least 2 times. So price is going back, and what we see 118, 118 and 28, way lower volume. So we could join just on this retest. Just don't wait too long. And it played perfectly. And yeah, and this is about the marking these imbalances horizontally. Just to compare, this is the footprint chart, also an M1 for the from the S&P. This is the initial, or not initial, the main asset the creator of footprint loved to trade. So take a look how the volume is here. These are thousands of volume, and look at these imbalances. This is incredible. Yes, so they were focused maybe not on the zeros, but on the multiple times of difference, like 2 or 3 times bigger offer than the bid. And let's see here, right? We have 0 to 11, 0 to 20, 3 to 22, 8 to 41. It makes a kind of bigger area of support to so volatile asset, as they have bigger chances to find the rejection. There are high imbalances. It's like hourglass. Here are a lot of volume, he was very lower, and here once again a lot of volume. And on GU we have small candles, and as you can see on the candlestick chart, these are usually just one imbalance on the candle. So I'm not taking a look on every single one, just the sharp move, or when I can recognize the pattern inside bigger zone. So really I prefer to make it simple. I love the precision, and for me it's better to draw one line as an imbalance, not making it as a two lines on the footprint. When price want to reach my level, it will. Yes, when I see the decreasing volume in this thin one exact price level, I am ready to enter. So this is not so moving as fast as the other assets. I like GU for this reason. Yeah, so that's about imbalance. These all entries you can find on the summary of the day video when I'm explaining with the same way my take in trades. So the rules are still same as on intermediate part of the course. The pattern, break of imbalance, or join the imbalance from sharp move, and looking for a decreasing volume. The best is 2 times lower.